Guys, welcome to another episode of Deal or Bust. Our founder today is big time. This is the show that founders come on to try and sell their companies live. Don't miss any episodes. Make sure you click the subscribe button right now. And if this is the first time you're watching, I want to welcome you. My name is Nathan Lacka. It is 1:01 p.m. here on Thursday, August 6th. If you guys can see that, you get the high def TV, the high def camera, and then it doesn't know how to do basic stuff like focus. There we go. And then it disappears. Great. But I'm Nathan Lacka. Again, you're watching Deal or Bust. We're going to have a great show today. Founders doing $2 million in top line revenue and profits. We love profits. They're doing $250,000 in profits. That was in 2019. So this is one of the larger deals we've had on. I want to say hi to everyone. If you're just joining, let me know you're around here in the comments. It also gets our founder excited. It gets our buyers excited. It gets our experts excited. So just say hi in the comments. Let us know where you guys are joining from. Vasu says, Nathan, there's 1,500 people waiting. I know I've got a great crowd. There's already 400 people here, guys, watching live. Again, you're about to watch a founder try and do a deal live. It's going to be something like you've never seen before. David Cotton, good to see you, David. And guys, if you invest in commenting, I can bring you live on the show. See, watch this. Robert Moreno says, love Deal or Bust. Watch this. Chris, boom, I'll bring you live. There's Chris. Here we go. Chris, good to see you. Again, I can bring anybody live real time. So let me know in the comments right now where you're joining from, and if you're a founder or an investor, That's your way of telling me that you're ready to go. And again, if you're just now tuning in, what you're about to watch is Deal or Bust. This is the company's P&L today. 2019 revenue, 1.9 top line, 260,000 in net income. It is a B2B SaaS tool in the e-commerce space. We're going to meet the founder here in about 49 seconds. Misha, you ready? That 49 seconds. He's a killer. We're going to have a lot of fun with him. Great business today. And we've got 3 great buyers on as well. We're also going to meet here in about 6-7 minutes. The way the show will work is, again, we're going to bring the founder on. You'll all meet them. You're watching Deal or Bust. After we meet the founder and we go through what the product does, we're going to bring on the buyers. The buyers will ask questions about the company, and with the goal of making an offer at the end of the episode. While the buyers are thinking about what offer to make, we're going to bring on great experts, and we have really an unbelievable group of experts today. I want to tease you with them real quick. But first, again, those of you just joining, here's what you missed last week. You saw Javier come on with TweetBinder. Great business. Neil Patel asked very direct questions and ultimately made a decision very quick at minute 13:37. Other buyers made very interesting offers towards the end. And this is what people were saying about the show. Clifton said, really enjoyed this thing. It's like Shark Tank, but raw. Ebenezer said, great show. This could be the next Shark Tank. And we've got Brian saying, aspiring entrepreneurs and founders, this is well worth a watch. Again, our experts today, these are great people. David Hauser, co-founder of Grasshopper. He also launched Chargify, sold it in 2016. He's also an author of Unstoppable, now an angel investor and building a company called Superfat and another one called Delegated. We'll hear from him. We also have Peter Zoda with ProfitWell, the experts in anything pricing related to anything B2B or B2C, SaaS or recurring. Before that, he was an analyst at OpenView Venture Partners. And again, now a general manager at ProfitWell. We also have Yako. The Yako. He better bring the music. He always starts with a nice jingle. He's going to bring the music. He's got his beanie on today, which means he's serious. I can see him in the back room. He's got his beanie on, so buckle up. Winning by Design, keynote speaker, author. And our buyers today are great. Nicole's in the back room. Nicole, look at this shot. This is a great shot, right? She's smiling. You guys can't see her in the back room. But Nicole with OMX is joining. She's founder and CEO. She was also a dragon on the Canadian version of Shark Tank on cable called Dragon's Den. She's going to be live here as a buyer today. She saw the deal and said, Nathan, I'm interested. Please bring me on. I said, Nicole, you're in. You're in 100%. So you're going to meet her in a second. We've also got Matt Althauser with Polychrome Capital. Tim Schumacher, who's the founder of AdBlock Plus and is also the co-founder of SaaS Group. He's targeting enterprise B2B SaaS companies. Again, we're going to meet all these buyers in a second. But first, none of this would be possible without meeting the founder, So guys, yes or no? We ready to rock and roll? You guys ready to meet the founder? Should we bring them on? Boost them up. Get them excited. There's 400 of you guys watching right now. Post in the comments. Let them know that you're excited to see them on. It takes a lot of vulnerability to come on this thing live and share all your metrics, do all this real time, put your P&L up, put your expenses up. It's going to be a lot of fun. But our founder today, I'm bringing him to the stream right now, Misha Krunik. Misha, welcome to Deal or Bust.
Hey, hi guys.
Good to have you on. Okay, so tell everyone, where are you joining from and what's the company?
So the company's officially name is Webcentric. We're based in Belgrade, Serbia. But actually the product, which I guess I'm here with you tonight, is called Price to Spy. and it's an online price monitoring tool, which dates back to 2011. We were one of the very earliest to enter the market. Nowadays, it's rather saturated, but
now, Misha, Darko in the comments is saying, oh my gosh, I think I know these people. I have to also thank, you see P2S up here. We're going to have Darwin put the link to Price to Spy in the comments. So if you're watching, you can go to the website and actually see the business. Misha, it's price2spy.com, correct?
Correct. Price2spy.com.
Yep. And guys, here is, again, revenue data from last year. Misha, how much revenue did you do top line last year?
It's close to 2 mil, but it's 1.95. I must say, this is not all Price to Spy, because we do other things as well. But Price to Spy makes like 95% of our revenue.
Well, we're about to bring the buyers on. They will certainly ask questions about that. And the beautiful thing about Misha, what you've built is you're not some big B2B SaaS company that's burning millions every month. How much did you profit last year?
The profit last year was, after the taxes, 262, I believe, USD, 260,000 USD. Before the taxes, it was like 310.
We're going to spend the next 5 minutes, Misha, going through the product. Audience, Martin Singh in the comments, Darko, DeCarlo, Callaway, it's your time to ask product questions. We're about 4 minutes away from meeting the buyers as well. Misha, let's talk about the product. So Price to Spy, it's competitor price monitoring. Is that accurate?
That's correct. Actually, we have two groups of clients. One is what you just said. It's like online retailers who use us to monitor their competitors in an automated way. And the other group are brands, manufacturers who use Price to Spy to keep control on the prices on the market. Basically, they do not want their retailers to price their product too low, because that would jeopardize the perception on the market.
So Misha, what we're seeing here on the screen are the 5 key things that you do. You enable brands to pay you in order so they can do price comparison with competitors. They get alerts when their competitors change pricing. They get reporting and price analytics. What does smart spidering mean?
Smart spidering means that actually we can figure out when your competitor adds something new to their website. So you do not have it yet, but maybe you would like to add it to your assortment, and you want to be alerted when that happens on competitor website.
So let's go through an iPhone as an example, because everyone knows what an iPhone is. So the example you give here, an iPhone might cost $699. We're now comparing, we're looking at your back end here on the screen. This is Amazon versus Best Buy versus Walmart. Describe what we're looking at right now.
Okay, so what we are seeing is that, for example, the Red website does not, which is Amazon, I believe, does not really care about the prices of the others, because it wants its price to be up on the top, while the other two, yellow and blue one, are actually competing. And the yellow one, as you can see, I guess country, it's like 20th of July or something like that. It drops its price, and then the following day, the blue one, which I believe is Best Buy, drops its price slightly below the yellow one. That means that the blue one wants to stay competitive with the yellow one. And that also means that he most likely does it in an automated way, because he changed his price straight after the yellow one did. And there is actually proof of that like 3 days later, when the yellow one goes back with its price. So most likely he had a promotion running for 3 or 4 days. The blue one is back with its price as well, but it wants to keep its price the lowest on the market.
Very good, Misha. So yeah, it's clear here, those two brands, they're following each other. Walmart and Best Buy are pricing here. Now, true or false, this can be used for anyone, any brand running an e-commerce play. We're using an iPhone as an example here, but any B2B e-commerce play or e-commerce in general can use this tool, right?
We're having clients for more than 25 industries, practically anything you can think of.
And how many customers right now?
Close to 700, 699, I believe, today.
699. Very good. Before we bring the sharks on, we're about 37 seconds away from doing that. Here's some other screenshots. You guys are seeing what a price change alert email looks like. So when prices change on things you're tracking, you'll get the alert email. Additionally, we're looking now, Misha, at the main dashboard. It's kind of hard to read here, but point is you can track a lot of SKUs in one spot and monitor the prices real time, correct?
You can customize this dashboard according to your needs, because if this is too crowded for you, you may want to drop some things. Some other folks may add more widgets to the dashboard, so it's highly customizable.
Yep. Again, those of you just joining, you are watching Deal or Bust. We've got Misha on with Price to Spy. He's doing $2 million in top line revenue, $260K in profit. We're about to bring the buyers on, and they're going to see if they can get a deal done live. It's like Shark Tank, but for software companies. We will look at all of your questions, guys. I see Martin, you're asking great questions in the comments. API integration with all. If you guys engage in the comments, I will bring you here live, right? So Abius is saying, interesting idea, but I don't get the main idea. We'll dive into that here in a second with Misha. Misha, first though, again, we want to bring on and introduce the buyers. So let's go ahead and jump in here. Let's start first with Miss Nicole Verkint with OMX Group. Nicole, welcome to Deal or Bust.
Hi, how you doing?
Good to see. It's been a long time since that little coffee we had up there in where was it? A coffee shop in Toronto, I believe.
In Toronto, yeah, it has been.
All right. So what's your initial gut take here on the product?
Well, I mean, right away you said that there's a lot of competitors now. I don't know anything about this space. I just really liked B2B. I like SaaS. I like the size. So I was obviously very intrigued. Can you talk a little bit about the competitive landscape?
Sure. Well, basically, when we started, we were number 3 in the world. I believe nowadays there are more than 100 companies competing. But what makes us different, and actually we made this page on our website like in 2015 when we figured out there are so many competitors booming. We said, okay, what does make us different? Number one, it's our technical ability, because there are websites out there who do not want to get their data scraped. And we're very good at it. And we're very good at staying undetected as a bot. Okay, that's number one. Number two, we can scrape.
Spy.
Yes. Second thing, it's the versatility. Basically, we can scrape practically any website in any language, in any currency, any geography. And actually, that's why we have so many clients worldwide. Further, Price to Spy is a highly customizable tool, which actually does come very important when you speak to enterprise clients. Number four, our support. Well, in any kind of user poll that we had, our support was getting 5.0. Meaning that we're very good at no-nonsense support.
Misha, before we continue past support, I want to get our other sharks on. Nicole, give a quick summary. So did you sell OMX? Are you operating out of a fund? How are you buying SaaS companies?
Yeah, I'm looking for something where I could operate it in the long run. So for me, my gut right now is I'm having a hard time understanding where I personally would add value to something like this. I have a few more questions, but go ahead and let the other sharks
save them. Yeah, well, that'll be a nice big open loop. We're going to meet the other buyers, get them on here live. Let's start with Matt Althusser with Polychrome Capital. Matt, welcome to Deal or Bust.
Hey, Nathan. Thanks for having me. Hey, Misha. Good to meet you as well.
Hello.
All right. So, Matt, tell us real quick, what's your target? What kind of companies are you looking to acquire?
Enterprise value of 500,000 up to 10 million. We already have a fund raised by friends and family, and yeah, we're looking to come in, give operational leverage to the team. Our team is really strong on the go-to-market side, deep experience in the B2B SaaS space.
And he's got deep experience, meaning he was head of sales at Optimizely back in the day, and also COO at Amplitude. Is that Matt? Is that right?
Yes, that's correct.
All right, very cool. And just give me your hot take, one sentence here. What's your initial reaction here to Price to Spy?
Similar to Nicole, this is like a really competitive space, and if you just squint at all the products, then you probably start seeing them be pretty similar. So I'd be really curious to understand what retention looks like. So how fast are you churning through customers, and then what kind of lifetime value are you expecting out of these accounts that you're landing?
So Misha, be thinking about that while I bring on our third and final buyer, Mr. Tim Schumacher. Tim, welcome to the Deal or Bust.
Hey there.
I see you upped your lighting game this week. We've got the beautiful sun hitting your face. This makes you look more like an angel so that when you offer a crazy royalty deal, people don't think it's so tough.
Well, I'm a business angel in my side job, and this is just the sunset over Lake Constance here in southern Germany. But yeah, as you say, my main job here and why I'm here is that I'm buying businesses for SaaS Group. And actually, I love this business. It's really close to the last business we bought, Scraper API. It's a super competitive space, but it fits really perfectly. So we know a ton about this space. That's really good.
That's great. Well, guys, for the next 5 minutes, buyers, it's your time to interact with Misha, and Misha, to your answer their questions before we then bring on the experts. And then after the experts, buyers, you'll come back on and then make an offer or say you're not interested for X, Y, and Z reasons. So buyers want to get as much information out of Misha as possible. And Misha, again, these could be one of your partners in the future. So you want to get information from them as well. If you're just joining the show, you are watching Deal or Bust. We are talking to Misha with Price to Spy. He did almost $2 million in top line revenue last year and almost $260,000 in profits. B2B SaaS play, price comparison tool, selling to B2B e-commerce brands. And with that, I'll pass it over, Nicole, to you. What's your first question for Misha?
Well, it was about retention. So the same question Matt had.
Okay, on an average year, we would lose 19% of our clients. I'm speaking financially now. Okay. But what I've noticed is that clients do go and come back, which actually makes me think that sometimes it's not us, that we've done something wrong and that they went away. It's actually clients who cannot keep up the pace with the tool. Basically, we provide them the data, we provide them the analytics, but they need to do something with it. There needs to be somebody in charge of pricing within our client who will make some decisions. Okay, there is a possibility of automating things, and yeah, Price to Spy does support it. We, for example, enable you to integrate via API. We do have such clients, but it's very risky to fully automate the cycle of price changes. Usually somebody needs to tick off that final decision on the price change. And we see from time to time clients saying, sorry, we are restructuring, we don't have anybody to be using your tool. We try to explain that that's a shame because you're going to be losing money. But again, yeah, it's their decision, they go, but quite often they come back.
So Nicole, is 20% annual revenue churn a concern for you?
Yeah, a little bit. And then I guess just the behavior around, are they using it to set their price up front to determine what their price should be, or is it really around long-term monitoring?
Basically, it's up to you. We have clients who subscribe for a couple of months and then they say, okay, I needed the tool for the season and then I'll come back next summer when it's my high season again. We have others that use it day in, day out. Another thing which is specific is that we offer incentives for long-term relationship, let's call it that way. So if you pay, for example, for 12 months upfront, you're going to get 2.5 months from us for free. And goes even higher if you decide to pay 2 months upfront, even 3 years upfront. It's nice to have a client who pays 3 years upfront because you know that he trusts you.
Misha, let's go to Tim. Tim, what are you curious about this business?
I would really love to see the P&L. I mean, 2 million is a nice size for a business, but then, you don't operate in a high cost country. Why do you only have, quote unquote, a 250K in profits? So walk me through your P&L, please.
Well, I guess if I knew answer to that question, I wouldn't be speaking to you guys today. But yeah, we do have costs. And one of the things, actually, Tim might or might not remember, we exchanged a couple of emails a few months ago. Tim approached me for another SaaS business that we run. Actually, that's another 5% that I mentioned. And actually, when Tim heard in one of my emails that we have 100 employees, it's actually 105 at the moment.
Okay.
Sorry, So I wonder.
Misha, let's be specific here. So we're looking at the P&L right now on the screen. In 2019, on $2 million in top line revenue, you have $1.1 million in cost of goods sold. How much of that is headcount expense?
Headcount expense is something like 65 to 70%.
Okay, so
You have
about
100 people on
$700,000.
100 people?
Exactly, 105.
Well, okay. What do all those people do?
I can give you a breakup around the teams, but look at it this way. We monitor prices on 70,000 different websites. Each and every day, a couple of hundred these websites change, and we need to adapt price to SPY in order to capture the correct price once again, because if we don't, our clients won't be happy. So we have a large operational team taking care of detecting, so actually the automation takes care of detecting faults, but the operational team needs to make it work again.
Misha, how many developers are on the 100 team? They're writing code full time.
There are 40 to 45 developers.
Okay, and how many people are on support?
20.
20. So 45 developers, 20 support.
Marketing.
But though you need those 45 because you're saying you're constantly having to scrape new stuff. Like you haven't just built an app where it's you can leave it alone.
No, you cannot leave it alone.
Yeah.
Because there are so many different websites out there working in so many ways. Some of them invest a lot of money in detecting and blocking bots. You have to be smarter and quicker than that.
Matt, let's go to you. What are you curious about?
I'm just kind of processing the manpower to run this organization first. It's a big lift for $2 million. So I guess what I'd love to understand is, do you see a path to getting away from making this a manual scraping services business and actually turning this into a technology business? What would that roadmap look like? And what is the path to getting there for the company?
Guys, one of the reasons why we are so successful, like I said, there are like 100 competitors out there. We are number 5 or number 6 at the moment. And one of the reasons why we are there is because we automate everything that can be automated, but everything that cannot be automated, yes, we do have a lot of colleagues who are in charge of such things.
Misha, be specific there. What does a task look like that can't be automated? If Walmart tomorrow morning changed their iPhone price from $700 down to $650, are you able to scrape Walmart's site, or do one of your 45 engineers have to visit Walmart's website every day, look at every SKU, manually record pricing, and feed it manually into your back end?
It's not the price change that's going to cause trouble. It's going to be a change on Walmart's website. Walmart may change the structure of its page. It might introduce a pop-up, it might introduce a banner, it might detect you as a bot, etc. There needs to be an engineer looking at it and fixing it. Now, in most cases, like I said, there are a couple of hundred websites which need to be fixed. Call it fixed every day. In 70% of the cases, that fix is up to 5 minutes work. However, the top 5% are real problematic websites which do not show prices in just plain HTML. They show it in JavaScript on Ajax code, or they require you to log in with the username and password. And basically, yes, we can handle such things, but the engineer needs to step in, identify what has changed on the website, and adapt price to SPY to it.
Got it. Guys, before we take more buyer... Oh, go ahead. Who is that, Matt? Go ahead, follow up.
Yeah, I'm just curious on the follow-up there. Are you using a service to manage all of these micro jobs that you're outsourcing to the engineers? Like, how are you efficiently managing that? And what happens when, you have to bring more engineers on board? That's like the big thing is having to manage that headcount is a lot of work. But if you have a service in front of it, what does that look like?
Basically, we have teams, and the operational team, these are the guys taking care of adjusting price to spike to these changes, are young engineers, usually fresh off the university. And we hire every 4 months, we have a program of internship where we bring them in. They spend like 6 months with us. They learn a lot. They start from basic tasks and they progress towards more complex ones. We usually, if we are happy with them and they are happy with us, they stay and progress towards more complex positions. And after 4 months, another round of young, fresh engineers comes in.
Got it.
I have one more question.
Yeah, Nicole, jump in.
Yeah, I'm just really curious. If you have a customer come on and say they have 20 products, are you now specifically just checking their competitors' pricing, or are you doing it for kind of any product that could fall in any of the many industries of the 700 customers you have? Like, how do you make it so you don't have to keep checking products for stuff that you don't have customers for?
Okay, we expect our clients to tell us, okay, here is our 20 products,
okay,
and here is our 25 competitors we consider important.
Got it.
Our task would be to go out on these 25 competitor website, find matches. Matching is actually the most complex part of our work. Price scraping is actually more simple compared to price matching, to product matching. We find matches, load them into Price to Spy, and from that moment, automation kicks in, performing the price checks day in, day out.
So it makes most sense for you to sell to your biggest customers, direct competitors, so you can just check the same products for them.
Yes, but one client's data is one client's data. We cannot share data from client A to client B.
Yep.
Got it. Thanks.
Guys, if you're just tuning in, you're watching Deal or Bust. Misha has met the 3 buyers here, Nicole, Tim, and Matt. They're asking tough questions. We're about to get into more of the P&L and understanding the business model, pricing, and talk to our experts as well, with the goal of the buyers saying, you know what, listen, I want to make you an X amount offer, Misha, to buy the company, or them saying, you know what, we're not interested for X, Y, and Z reasons. And then it's on Misha. Will he take a deal or will he not? I want to say hello to all of you guys watching. We're 400 of you guys watching live, which is incredible. Darko, Bogdan, Baiku, Lee Lovell, Andrew Gazdecki with MicroAcquire in the comments. I want to say hello to everyone. Guys, if you're curious more about the pricing structure, the customer growth, and the MRR growth, give us some love. Show some love to Misha. He's getting beat up here, but he's going to punch back in a bit. I can feel it. Look, he's taking his water. He's getting ready. He's winding it up. He's bringing in the ammo, all of his 100 employees. Give him a thumbs up here in the YouTube chat or Facebook, wherever you're watching, and show him support. And if we get 50 people clicking that like button, we'll do another one of these episodes next Thursday at 1 p.m. Central. So go ahead and do that now. Misha, let's touch quickly while people are doing that on your growth. Right. So what is MRR today, and where are you getting those customers from on a monthly basis?
So our MRR is at the moment 159K, very close to 160. But you should be aware of 2 things which are kind of blurring things. One is the fact that clients can pay upfront for a number of months and get a discount, and quite a few do use it. So we won't actually get, if he was paying the nominal price, the nominal package he's subscribed for, then we count it as, we would get to 160K MRR. However, some of them will be paying less because they're using the opportunity to pay upfront. However, there is another, that's a negative side of which will bring the MRR down. The positive side is that we have quite a few additional services that our customer can opt in for, which are of one-off nature. Like I mentioned, product matching or scraping.
Misha, how much is true monthly recurring revenue? If there were no services, how much would you be doing per month?
The average for 2020 is 181K.
Okay, hold on. MRR right now is $155,000 a month. How much is pure software monthly recurring revenue?
That's 155. And on top of that, you should add an average of 26K.
I see. So sorry, the numbers here are this is the pure revenue. There's actually juice on top of this in the form of services revenue.
Exactly. And that very much depends on what clients wants to. And actually, the more enterprise the client gets, the bigger the need for such additional services.
Matt, what was your question?
Sorry.
Sorry. One of you jumped in and I cut you off.
Oh,
not you. Okay, good.
Sorry, no, I'm good.
Right.
I do have a question though.
Go ahead, Tim.
So you run 2 other businesses as well. Like, how much time do you actually spend on price to spy? And secondly, like, do you pay yourself a salary? So is that kind of part of the P&L, or do you just take out the profits at the end?
I do have a salary of my own, which is relatively modest, regular Serbian salary, let's call it that way. And I've been taking parts of that profit, but real parts, only a couple of years ago. And that's actually nothing compared to the full profit the company has been making. So actually, the money is still in there, and I'm not sure if you've seen that part of the sheet, of the sheets, but we do have actually quite a lot of cash in the bank, and we do have assets.
Misha, how much cash is in the bank?
$1.2 million.
Okay, great. And how much runway is? I mean, are you still profitable today? You're still making money?
Oh yes. Suppose that we lost all of our clients tomorrow, we will be able to run for another 8 months.
That's great. Nicole, Matt, Tim, you have to like that, right?
Yeah, definitely. And by the way, the cash, when we later make an offer, offers are always cash and debt free. So if we would say 1 million, that means, you take the cash out before, and the 1 million is exactly for the company value, just to make clear we're on terminology here.
Misha, what do you want to do? Do you want to double down and spend more time on this, or have a buyer take over operationally? Like, what do you want to do?
In ideal situation, I would find a partner. So I would actually prefer to stay to a smaller or larger extension. A partner which would help do one thing which I wasn't able to do myself, and that is build a sales network which would bring us more enterprise clients. So in ideal situation, I would continue to do what I'm doing now, but with somebody much more experienced in sales, helping get more enterprise clients.
Guys, Nicole, Matt, Tim, on that note, what we're going to do is now go to the experts, starting with David Hauser. We're going to give you guys, the buyers, some time to remove yourself from the stream here for a second to think about what offer you might make, or 1 or 2 follow-up questions. So we're going to talk to the experts here for 10 minutes, then come back on, let the buyers ask final questions, and then negotiation and deal time. And we'll see if we can get a deal done live. Now, those of you just joining, meeting the buyers, again, we just heard Tim ask some great questions, founder of AdBlock Plus, and he is an active buyer. They're all active buyers. In fact, just recently, one of the last deals that Tim did was here with Michael Cheng, who it was a company called Sniply. Mike's now running Lumen 5, but it was a big, great deal, multi-million-dollar deal that they found via Hello Exit. So if you're interested in exit tools for your SaaS company, I encourage you to go check out helloexit.com/tools. And now on that note, what we're going to do is shift over to the buyer. So again, Nicole, Tim, Matt, I'm going to remove you guys from the stream. You'll have 10 minutes to sort of collect your thoughts. Then I'll bring you guys back on, okay? All right. All right, great. So I'll remove you guys. Misha, while I bring them off real quick, where's your head at right now? What are you thinking? Do you think those were fair questions?
I see that the buyers are kind of, did not expect that many FTEs, right? On the other hand, I guess they are not familiar with the business and the complexity of price monitoring, especially if you want to capture prices from nearly 70,000 websites. Mm-hmm. But I do sincerely hope that there is somebody out there who is, let's say, who does have the sales experience in building the sales network.
Yep, that's clear. It's clear that's what you want. So they're thinking about it. I can see their brains going. Let's quickly, guys, I want to put a shout out there. This show is doing well. We're on our 6th or 7th episode. 10,000 people watched last week. If you guys are buying SaaS companies and you want to be a buyer like Nicole or like Tim or like Matt, or if you're like Misha and you'd consider selling, or if you're an expert in a space related to B2B SaaS and you want to come on live, I encourage you to go to nathanlatka.com/casting right now. Fill out the quick form. It takes about 18 seconds, and my team will follow up with you afterwards and see if we can get you cast in a future episode. Misha, let's go now to our first expert, which is going to be Mr. David Hauser. So David, if you guys don't know David, he founded Grasshopper back in the day. Let me get forward to a slide here. Founded Grasshopper back in the day. And then prior to that, or after that, sorry, I founded a company called Chargeify. So David, let's bring you live here, man. Welcome to Deal or Bust.
Hey guys, hey Misha.
Hey David.
So David, give us, your quick background, at least what I know. I know you're doing a bunch of stuff, but what I first knew you from was via Grasshopper, right? A call tool for SMBs and mid-market companies, and then Chargeify, which I think you sold to ScaleWorks in 2016, right?
Yeah, so I built Grasshopper from $0 to $30 million a year in revenue and sold it to Citrix. Then built Chargeify and sold it to ScaleWorks, where I'm a large LP as well, and have a number of companies as well today, also outside of the SaaS space.
Yep. So, and then the book I hear is doing well, Unstoppable, correct?
Yeah, it is, as well as our super fat company, which is in the CPG space.
All right. So you've sold your company. You've gone through the process. Talk to Misha here. He's kind of in a very critical moment. What's your gut? Are the buyers being fair? Should he share anything he hasn't shared yet?
Yeah. So, I actually really like this space. I was an investor in a company that Plaid acquired. So very similar in terms of having to have a lot of people monitoring websites and getting things to be fixed and worked. I think just for the top of my head, I would say, first of all, thinking about your COGS, your cost of goods, like I want to see that margin being 70 to 80%. And I think it's probably closer to that. You've just put in a lot of costs that I would not classify as cost of goods, right? So think about what actually it costs to deliver the service, not overhead. Strip that out so that way you can actually have a real conversation about this. Then look at the next metric, which I care about, which is revenue per employee. In a SaaS business, I want to see $100,000 at least revenue per employee. Obviously, we're a little bit short of that based on number of employees. I'd like to see it as high as $250 revenue per employee. But I think helping people understand the cost that you're paying some of these employees would be helpful, because I assume some of them could be lower paid than a typical full-time person if they're doing kind of back-end work. And then my last comment would be, think about what other industries and places you could sell this to, even if it's direct to consumer. Who else could use this? Obviously, there's lots of tools for Amazon pricing, but if you have the ability to scrape hundreds of thousands of websites well and effectively, I think that could be used across a lot of industries that may pay you more.
Thanks for that. $100,000 per employee sounds great when you're talking from Silicon Valley. Looking from Serbian.
That doesn't cover rent in Silicon Valley, man. You got to be like 200, 300 grand of revenue per employee.
Oh, okay. You're giving me a way to go. And actually, I came to conclusion a couple of years ago that I do want to get more enterprise clients because it pays off better. Basically, you do not need as many employees for the amount of revenue you're getting. That's where I plan to go. It's just not that easy to get there, especially from the sales perspective.
David, can you give him some ammo? It's clear the buyers are going to hit him hard on the workforce, just the sheer volume. How can he counter that so he doesn't lose out on valuation?
Yeah, so I want to know how much you're paying them and how much is actually attributed to delivery costs compared to overhead, meaning if I add more customers and revenue, does that scale exponentially, or does that start to level off, right? Because as a buyer, I want to know if I double, triple, or 10 times revenue, what happens to my real cost of goods? And if a lot of that does not change, I think that's a powerful thing to talk about. Then I would think about your churn. It's actually not tremendously high. I think it's a little bit high for enterprise, right? I would expect to see it a little bit lower than 1.5 or roughly, I think it's 1.7 a month on average. I think if I heard the numbers correctly. For enterprise, I would want to see that lower. So talk about what the different groups look like. Do you have a group of enterprise clients that churn is 0.0 and very, very low? And do you have a group of people that are higher churn and you may not focus over them over time?
The churn for the enterprise clients is actually way below 5%. But actually, the majority of our clients are not enterprise. We're en route to getting enterprise, but it takes time. And as for the scaling up, as you get more and more clients, the number of people on the support team will kind of linearly go up. That's support. The operations will be linear, but not that steep, flatter than linear, let's say, because there are a lot of clients that do monitor the same websites, and actually one fix will fix them all. When it comes to development team, actually that more or less stays the same because we're just scaling up the number of clients.
So think about how to present that data, right? And because right now it's just a single line item cost of goods. How do I break that out and see the differences so now the buyer can understand that?
Okay, thanks for the advice. Actually, I used to be a developer myself, and to be honest, I do not understand most of the things which are there on these sheets. When you say your cost of goods should be lower, you should put them in another bracket. What are you saying?
We run into this all the time. So I totally understand.
David, thanks for coming on. This is just great advice coming from someone who's done it many times before. If people want to connect with you and learn from you offline, where's the best place for them to find you?
DavidHauser.com.
David Hauser. Spell last name real quick. It's in your bio actually, right there, right?
Hauser.
There you go. David, thanks, man. Appreciate it.
Thank you. Thanks, Nathan.
All right, Misha, we're now going to go in and chat with Peter Zotto, who talks and does a lot related to pricing at Price Intelligently. Peter, welcome to Deal or Bust, man.
What's up, Nathan? Misha, what's going on, man? How are you?
Hello.
Can you all hear me okay?
Good to see you. So, hey, real quick, because we can. Yeah. Misha, I'm going to show Peter your pricing slides real quick so that the audience and Peter can see them. He got them beforehand, but the audience hasn't seen them yet. So this is a screenshot of your pricing page. Your pricing based off a couple factors. Your pricing based off product URLs, yes or no to API access, so feature-based upselling. You also have some sort of alert-based upselling. And then you can see here where that dotted circle is, you've got like 8 or 9 sort of different price points. So Peter, start off with what you think Misha's doing well from a pricing perspective.
There's a couple things going on here. Like I cringe a little bit at the pricing strategy, partly because I think, Misha, what you're trying to do, it's not uncommon for businesses of your size to do this. You're trying to sort of be all things to all people when it comes to your actual price points. And what I would tell you is to scale that back a little bit. I think that there are likely either too many plans or too many categories of plans. I think you can probably cut that by 50%. The other thing is that you're pricing on a number of different value metrics. And this is a lot harder for people to understand when they're coming to a pricing page. So product URLs makes a lot of sense for you guys and probably for your competitors as well. I'm not entirely, now granted, I'm not in this business, so I don't know it nearly as well as you do, Misha. I'm not entirely convinced that pricing via product URLs makes a lot of sense. And the reason for that is because you may have somebody that's spending a lot of money with you or could spend a lot of money with you with very few product URLs. You could have somebody that could spend very little money with you with a lot of product URLs. And so you may be doing yourself somewhat of a disservice here. So I would be careful of actually pricing via that value metric. It may make more sense to price via gross merchandise value or the number of SKUs in a particular category that they're selling against. So that's my sort of first piece of feedback here. The other thing is,
what's your reaction to that?
Oh, sorry.
Actually, I have an ongoing fight with the guys from my own sales team who tell me the same thing, and I kind of resist. Why am I resisting? When you're when you run a business which is 10 years old, it's not that easy to change your pricing structure. You've been explaining it to your clients for years and years, and a lot of them bought into it. And now you need to tell them, this does not work any longer. We need to change it. Another thing which kind of frightens me, and I would like to hear your comment on that. We have not been changing our prices since 2012. Why? simply because I see more and more competitors getting out there, and there's practically no room to raise the price. Instead of that, what we were doing was adding more and more features and charging them on top, kind of add-ons. And actually that does work fine, but it takes time to build up.
I think so. The problem, I think you have like a hyper commoditized type of market like this. I think, Misha, you said early on, there's something like 100 players in the market. You're number 4 or 5. The problem is that like the way that if you haven't changed your pricing structure or your price points in sounds like 8 years, then it becomes just sort of like a race to the bottom, right? Because you have a competitor that enters the market, and what they do is they have a similar or slightly better or worse product, and they can undercut you via price because maybe they outsource all their FTEs to say the Philippines at a much lower cost. And so there is some danger for you there not to look at pricing on a fairly regular basis. That doesn't mean, by the way, for you, Misha, in this particular case, that you actually have to change your price points. What you can do is you can sort of flex your value metrics. You can flex your packaging structure. You can flex your trial length to have people get more value out of the product to make sure that they stick around longer, or that they don't churn and go to a lower cost competitor that is offering a similar or slightly better or worse product.
Misha, is that helpful?
Yes. And one more question. Do you foresee, if we change our pricing structure,
Yep.
and we would like to do it in such a way that the legacy clients stay with their legacy price plans. Do you foresee any problems if we change it and the legacy client says, why can't I have this deal?
I think especially with the number of clients you have, and for anybody that's watching this who's been a part of a business, at any point when you change your price points, somebody's going to have some sort of opinion. It's okay, expect that. Here's what I tell you, Misha, is that you have it is okay to change your price points, especially because you've mentioned this already. Your product has probably gotten better over the years. In fact, you wouldn't be around if it hadn't gotten better, right? It's okay to tell people that your pricing is going to change. You just have to give them enough time to be prepared for that, both emotionally and for whatever integration components that they need to potentially change when that comes, right? Look, our value is getting better to you, and therefore our prices are going up. But this is what you're getting in return as a customer, and especially as a longtime one. For the people that you want to grandfather in, I would tell you, by the way, I actually don't think you should grandfather people. If you want to, it's a personal opinion that we battle with our customers on quite a bit. It's okay if you want to do that. But if they do want to change, let them know that they're more than capable of taking advantage of a new price point. And what I would tell them, and anybody else that's listening, is take advantage of something that we call a grandfather discount, so that our price points are going to change come August 30th or 31st. If you upgrade before then, we'll give you a 50% or 10% discount on a new annual plan. So you give them something for committing to an extra year sooner rather than later.
Misha, there you go. A lot to think about. Peter, if people want to learn more from you and price intelligently, where's the best place for them to find you online?
Yeah, just head to our blog. It's just blog.profitwell.com, or hit me up on Twitter. It's at Peter the Kid. And last point, Misha, don't call your basic plan basic. It's bad, especially in a hyper-competitive market, because other people are calling theirs, premium and then enterprise and then something better. Don't destroy the value of your product by calling it basic. It's better than basic, I promise you.
What would you call it, Peter?
Where were you in 2011?
Peter Zotto, Price Intelligently. Thanks, man.
Thanks, guys.
Yeah.
All right, Misha, this is good stuff. We're going to spend 3 minutes with Jaco from Winning by Design. Then we're going to bring back the buyers. Guys, if you're just watching, you are watching Misha, who has a company called Price to Spy. Did almost $2 million in top line revenue last year, $260,000 in profit. He has 100 employees, which the buyers had some worries about. They're about to come back on, though, and they're going to say, listen, I want to make you an offer of X millions, or maybe less than $1 million, or maybe a lot of millions. We don't know. Or they're going to say, oh, we're not interested, and here's why. And then Misha's going to push back, and we're going to see if we can get a deal done live. We're exactly 4 minutes and 33 seconds away from that. But first, we want to meet Jaco with Winning by Design. Jaco, welcome to Dealer of Us.
How are you?
Good to see you, man.
Good to be back.
All right. So Misha's got a lot going on here. Now, you specialize in sort of go-to-market strategies for SaaS products. Let me ask you first, Misha, question for you we haven't touched on. Do you have any quota-carrying sales reps?
Until a couple of months ago, whole of our marketing and sales strategy was inbound. Okay.
All right. Jaco, what opportunities do you see here?
Okay. First, I'm going to, we need to do this. We all know what we need to.
Got to get it going.
And I'm telling you for the following reason. For Folks, did we all notice that Misha, did I get it right, Misha? You got 100 people on engineering payroll for less than $1.1 million, including your own salary?
Yes.
Okay. I'm sorry, but like that is like music to my ears. I'm like, all of us thinking this is bad. This is insane. This is insane. That means that you got an incredible engineering capacity. Second, am I right that you are from the University of Belgrado?
Yes, exactly.
Okay, and I assume you passed with decent grades. You look like the person that would not have skimmed it through. Am I right?
Yes, I do have a developer background, and I finished off the computer school in Belgrade. But the part which you're probably not aware of is that we lived in the same country for 6 years.
Oh, we did.
Yes, and I wanted to greet you with goedenavond.
Yeah, nice to meet you too. The reason I say this.
Hey, listen, you can't leave the host out. I don't know what the hell that means. What did you just say?
He said a good night or good evening to me.
Okay, very good. Well, now I feel included. That's great. Husafa, is that what you said?
Here's the thing, and like I'm gonna see if I can put this little music to it so it sounds better. Okay, there we go. Misha, you need to know.
What can I do? What can
you over-engineered it.
I get
You over-engineered it. You completely over-engineered everything. And that's why I'm looking at you. Here's what I want you to do. I'm going to give you 3 simple points of advice. Do this. The engineering capacity that you have is great. Your pricing page, I love what Pete from Profitwell just gave us. That's golden insights he gave. You need to do that. Just 3 things I need you to do. Number 1, there's no big logo on your website. If I go to your website, it doesn't make me feel comfortable. Now, if you're in the US, Silicon Valley-based company, probably that can work. If you are right now not a super known company and you're out of Eastern Europe, people are flashing. I want to see big logos on your site, and I'm certain you have them. Show them off. Number 2, you have a hella complicated pricing page. I'm sorry, but most of us will be joking around on that long after this session is over. We'll be talking about your price page, okay? Here's what the problem with that is. I want you to spend as much engineering power as you have on this pricing page. And I want you to show that on your website what the impact is that you deliver to all these clients. Calculate for me how much money you save them, how much money you made them, whatever. But I see all the price, all the focus on what it's going to cost me. We're talking about all the cost on engineers. I would deploy it and say, like, with this price, on average, we make $1 million per month, whatever it is. So that's the second thing. And the third thing, for you to be, and this is common knowledge, this is like, you need to do this. And Pete said it in part. When you want to be successful in a highly competitive market, don't try to be one thing to everyone. Go vertical. That could be a market segment, that could be a region, that could be something. But go somewhere and freaking dominate. Put the big logos up, show the big impact, and that way you can be successful. The way you're currently doing, you're over-engineering everything, which is fun, but hard to scale up.
Misha, makes sense?
Food for thought. I'll need it's easier said than done, Jaco, but I'll have to do something about it. You are right.
When you say it's easier said than done, I want you to simply put the same effort in it. You got 100 engineers for engineering product. Pull 3 or 4 people aside and engineer this out properly. Calculate it, show it, and go after that. It is the exact same thing. As a former engineer, I can tell you, same effort, same spreadsheet techniques that you're going to use in order to make this work for you.
Good stuff. Jaco, if people want to learn more from you at Winning by Design, where's the best place for them to find you online?
I will do that. Nathan, I got to know. We on the chat box, we are constantly, everybody is saying the same thing. In today's world, how the heck do you get your hair to look that beautiful, man? Like, what do you do?
Well, if you want to use the P to Spy price comparison tool, it's the black matte layrite. You can go compare pricing across Walmart, Amazon, and other outlets. It's about $12.99. My barber's upsold it to me the other day, but a little bit of pomade and a good sleep, and that's all it takes.
I love it. If I had it, I would do exactly that with it, man. I would love it. People can find me LinkedIn, YouTube, and so on. The company's called Winning by Design. and we have a book somewhere, stuff like that. All the good stuff is available online.
There you go. Jaco, thank you. All right, last question, guys, before we bring back the buyers on, then there's gonna be 10 minutes of negotiation back and forth with Misha. Misha, quick question for you. Right now, to get a new customer at 400 or 500 bucks a month, do you have a general sense of what your fully weighted acquisition cost is?
Yes, and that is usually 2.5 times less than the monthly revenue we get from the client.
So let me ask you a question. I'm going to share my screen with you using a calculator real quick, okay? If you had an extra, I'm going to put this in this little calculator at founderpath.com. If you had $500,000 extra today, true or false, could you add more than $14,000 in new monthly recurring revenue?
Actually, we do have cash. The thing is that I need a fresh idea what to do with it. Okay, adding more to our AdWords, we do have a significant budget for AdWords, for example. We can ramp it up, but it won't bring as many clients. You know, there is a certain capacity to each marketing channel. We are now spending more and more on blogging and on backlinks and on getting more visible on the internet, but it takes time.
It does. It does. Well, listen, let's get the buyers back on here. I just showed you, and I want to thank all of you guys watching. This is Founder Path. It is a new fund that it's our new project. I'm basically giving money to SaaS founders that don't want to sell equity. Obviously, Misha doesn't need it because he has 1.2 million in cash sitting in the bank. But if you don't want to raise VC and you do want cash, I encourage you to go to founderpath.com, type in how much you want. Maybe it's 120,000 bucks. We'll spit out sample terms over here on the left, so you can see if it works for you. And we launched on Product Hunt today and are currently, guys, at #1. So this means the world. My whole engineering team is watching, and really it's a guy named Mubs who just crushes it. But we're doing great, and I want to thank you guys for all those upvotes on Founder Path. Darwin will link to that in the comments if you want to go see what it's all about and see what people are saying about it. Misha, on that note, let's bring these buyers back on. So I'm going to add back Matt, we're going to add back Tim, and we're going to add back Nicole. So Tim, let's go to you first. You had some time to sort of pause and reflect. What follow-up questions do you have for Misha before we start talking about offers?
Yeah, so I'd love to dig a little deeper on your personal motivation. Like I liked earlier kind of the question you answered when you answered Nicole's question on kind of what you would like to do. You said that you'd like to actually stay on board and you'd like to continue this, but with some fresh mind. Is like, what's the ideal sparings partner for you? Like, if you could bake that new person coming in and injecting fresh energy and because you don't need capital. I think you just said so. It's like, that's not your bottleneck. So you need some new answers. Like what is the ideal person like?
The ideal person would be somebody with strong connections in the enterprise world who can open doors for us. Jaco and Peter did give me some food for thought in like what I need to simplify in terms of running business and our price plans, etc. Basically, I would need somebody with authority and experience to explain me why that would work better than what we have right now. And actually, what we have right now does work. We do go up 25-30% year on year. It's been like that for 4 years now, and I'm confident it will continue this way. But to be honest, I would like to go faster.
Mm-hmm. Okay.
Any follow-up there, Tim?
No, I'm good.
Where's your head at? Is this piquing your interest? Do you think you're going to end up making an offer, or are you out?
I will make an offer.
Very good. Let's go to Nicole. Nicole, last follow-up questions. Last things you want to know?
I don't have any more follow-up questions.
All right, Matt, you want to take us home here? Any last follow-up questions before we start talking about offers?
I would just be curious quickly, can you describe what the current sales team and the footprint of the sales team is? So, you have the 100 developers, but what does your sales team look like today?
Okay, so we have 20 people working in support/sales. They're shared resources. So when a client registers for a trial, he is handled by a colleague of us who in that moment puts on his sales hat Okay, and he will drive him through the trial process, and hopefully the client will subscribe. And from that moment, that person will wear her support hat. And of course, as the time goes by, we get new support team members on board, and then the old clients are migrated from the elder colleagues to the younger ones. So the elder colleagues can spend more time on more enterprise client and on the trials which are more heavy. Basically, the trials are very difficult in our industry because it's not easy to convince a client that you cannot just scrape 100 websites just like this without any errors. It takes a couple of days of back and forth. And we will fix those things, but somebody has to explain it to the client and make him be patient.
Yep. Matt, any other
thoughts? Last question, just so I understand kind of the potential in your market. What is your highest single paying customer? How much are they paying you?
Single biggest client is paying $95,000 per year.
Awesome. Thank you so much.
Matt, is that a concern for you that one customer makes up, what is that, 5% of the total revenue?
Well, it's actually encouraging in a sense, because what I'm seeing is they need to transition. There's a very competitive space here through digital AdWords channels. That's why you hear Mish wanting to lower prices so he can get more people in the front door. I believe that's kind of what he was saying. If there is this sort of pricing potential or pricing power, it actually opens up different sales channels that you wouldn't have if you had a much lower ASP. So it's actually encouraging.
Guys, very good.
Actually, that's one of the reasons why I'm here with you guys tonight, because such clients, and we have more such clients, not that big, but these are large enterprises. I'm very happy to have them as clients. They're happy with our services, but I would expect it to grow faster. You know, I need somebody who can sell what we do much better than what we're doing right now. And I'm saying this, I'm all the time comparing Price to Spy to my competitors. We pay a lot of attention to what they do, to features they build in. And I see that in most cases, we're better than them, but we are lagging on the sales side of things.
Yep. Guys, on that note, we're about to move into offer mode. If you're just tuning in, you're watching Deal or Bust. You're catching the end of it here. One founder, 3 experts came on and gave advice, and we've got 3 buyers. We're going to see. We know Tim's interested. We don't know about Matt and Nicole, but they're about to come on and tell Misha what they're thinking. If you want to play along, the company did almost $2 million in top-line revenue last year. They're currently doing $155,000 a month in pure SaaS revenue and another $25,000-ish per month in services revenue. Okay, so that's the business, and they're obviously profitable. So question for you guys watching, Lee, Gareth in the comments, Martin Singh, everybody else, what would you value this business at? What do you think that the buyers here might offer in the form of a deal to Misha? Misha, I'm going to let you wrap up before we go to the buyers. Is there any last thing you want them to know that you feel like you haven't shared yet?
I think I've said already the most important things. Why am I here tonight? I'm here for the sake of Price to Spy. I would like somebody to help me grow faster.
Yep. All right. On that note, Tim, let's go to you first. You mentioned you're interested. Are you going to make an offer or not?
I will make an offer, but I don't want to go first this time. I lost to Ryan last week, and I was first. So this time,
all right. Well, this is Nicole's first time on the show, and frankly, Nicole wants to go first. Nicole, take it away.
I'm going first because I know you have good news coming after. But look, Misha, you built a great business. It's very impressive. Getting to $2 million in mostly reoccurring revenue takes a lot of work. I'm out just because I can't see. I'm looking for something kind of unique, and I can't see where I can personally add a lot of value. I mean, my background's in selling to big B2B enterprise, but just kind of different. So I just can't see where I can personally add value. So that's why I'm out.
Nicole, thanks so much. Was this more or less fun than Cable Dragon's Den in Canada? Just say, make me feel good. There we go. Paid her so much money to say that. Misha, good stuff. All right, Nicole, thanks so much. Let's go to Matt. We'll go to Matt second here. Matt, where's your head at?
Oh, Tim, thank you so much.
You're welcome.
Yeah, so so I've been texting. I'm chatting back and forth with my partners over there. So the way that we're currently looking at things is probably in the range of 1 to 1.5. So looking at somewhere around 6 to 8x EBITDA is basically what we're looking at here. The way that we would, or the thing that we would bring to the table is go-to-market execution. So I myself was the first, actually I used to sell for Tim at one of his companies. I also was the first salesperson at Optimizely. We scaled that business very well. And then also was the CRO, COO at Amplitude. Then my partner actually comes from the e-commerce space as well. So we would bring a lot of the go-to-market and sales expertise to the table. And so, yeah, we would be interested for sure in trying to find something out and see kind of how we could do some sort of partnership with you together.
So Misha, he's basically saying, and correct me, Matt, if I'm wrong here, that you would value this company based on something like 6 to 8x of EBITDA margin, EBITDA being sort of net income in this case. So $250,000 in 2019, you're valuing the business at somewhere around 1.3 to 1.8 million dollars. Is that accurate?
Yeah, roughly in there. I think the thing right now, I think the company can be worth a lot more. I think the streamlining of operations is really important. Some ways that you could think about doing that is really focusing on specific target customers. So your area of scraping is reduced and the headcount could be potentially lower and your ASPs could be fundamentally higher across the board. So that's something we focus on a lot, is really thinking through target customer. And as Tim mentioned before, you know, these types of offers are obviously net of cash and debt. So the percentage of the company, that it would depend how much you retain and things like that, but you'd also get, you know, a great cash bonus in that sense as well. So,
Misha, do you understand the offer?
I think I did understand the initial part, which is EBITDA multiplied by 6 to 8. The rest, to be honest, I did not understand. But the initial bit, you use the word encouraging. I'll have to use the word discouraging.
Okay.
Matt, what is the actual offer? So if you're valuing the company at 1.2 to 1.6x, what are you actually offering? Are you offering to buy 60% of the company and have Misha keep 40%? Like what would the actual deal look like? What are you proposing?
Well, this is the wrinkle. Because he wants to stay on and continue to operate, what we would be saying is we're valuing the whole company net of debt and cash, or excuse me, excluding debt and cash at the 6 to 8x EBITDA. That means that the cash, whatever percentage we would purchase from him. So let's say you said, oh, I still want to stay on and retain 25% or whatever it might be, then we would pro rata that cash and pay you out the 75%, and then the 25% would stay in the business and then continue to roll forward. And so that you basically have
I get the idea, but I'll have to use the same phrase.
Okay.
Tell me why you use discouraging. What don't you like about it, Misha?
I would expect more than, speaking of the net value, so disregarding the cash and the equity, I would expect more basically.
Tim, where's your head at?
Okay, so let me first start off by saying that I really like this business. It does fit really nicely to some of my businesses. Like the whole logic with all the engineers and the filters and everything, it reminds me a lot of AdBlock Plus, where also, you know, we're constantly catching websites and banners, and it is personnel intensive, but also there's a lot to do with machine learning and AI, and that's really something where I can help. And then also kind of the whole thing of scraping and all of that fits really nicely to the other business we just bought with SaaS Groups, Scraper API, which is a tool for that, and we really develop a deep expertise on that. So I think I can contribute a lot from the product and also from the sales part. Although I gotta admit, like Matt is the better salesperson, so maybe we should team up, and I can help on the product side and Matt on the sales side. I mean, I've grown quite some sales organizations. Matt was part of that. But like it's not like my perfect expertise, and I do think there could be like some automated sales and stuff. So I'd love to bring something like that on the table and help you make this a $10 million business. Now, the catch is, and I can see why you're discouraged by Matt's offer, but the problem, like, this business is not like 1 year old or 2 years old, and you're like on a venture drill or something. This is a decade old, this business, and it's a nice AR and it's respectable and it's great, but it's growing really slowly. So I would value it actually exactly. I had exact same numbers, and like Matt and I did not talk. It's like I had like 1.3, 1.5. That was kind of exactly the numbers what I would have in mind. But don't think about this. And so maybe I can phrase it a little more encouraging. Don't think about this like we buying maybe 60% of the company. So we always require majority. So maybe 60%. Let's use that, but it could also be 51 or 70 or something. We're not buying 60% for that. We're injecting our time and our effort for this. In exchange for that, we give you some cash, but our goal is actually to make the whole company worth 10, 20 million. And it'll require a few years. Definitely, it's not something you can do overnight. But so see the value kind of we'd be bringing in. So the offer, kind of long story short, the offer we'd be making would be something around 1.3 to 1.5 plus cash, of course, you have for like 60% of the company for, on an enterprise value. So that would be net kind of about like 800,000 or something, but then devoting time and effort to actually help you grow this and automate it and make it to something where it's a 10 million or 20 million company.
We share the same goal. I'm just not sure we're going to make the deal.
Misha, do you want them as part? So what you asked for is a sales muscle. These are two folks, especially Matt, that's done it at some of the fastest growing B2B SaaS companies, and Optimizely and Amplitude. I mean, Amplitude, I don't know if they can share, but I mean, they've got to be getting up close to $1 billion valuation here soon with their rounds. I don't know if they're there yet, but they got to be close. They've done it, right? So counter.
And sorry, just Misha, I want to be clear. I would jump at the chance to work with Tim on a project. So I've worked for Tim at the beginning of my career, and I can say he is one of the best out there in the world. So he's a very, very good guy to have on your side.
I paid Matt almost as much as Nathan, you paid Nicole.
I'm not that good in negotiations myself, to be honest. Basically, in each negotiation, you have to start from somewhere. But I'm afraid our starting points are so much apart that I'm not sure that we will be able to reach the common ground. I mean, the word "juicy top guys" is actually too small to describe what I would expect from you.
Misha, what would your starting point be?
3.5 to what? 3.5 higher than what the guys have said.
So 5 million.
So stripped of cash and the equity, I would expect 7 million.
So just to sum up for everyone watching, there's 1.2 million cash in the bank. Misha's saying my starting point for valuation on this company would be about $5 million plus the 1.2 in the bank, or 5.5 million plus the 1.2 in the bank is like $6.87 million. Misha, is that accurate?
I said 7 million plus the cash and the equity, which we have at the moment. We have 2.2 million when you put all together all the equity that we have.
So before we get to push come to shove time, it's decision-making time. I'm going to bring in a third party since he's still here and he's sold companies. David, I'm going to bring you back on. Are you in a place where I can bring you back on? All right, he is. All right, so David, you've sold companies. Misha's at essentially like a a 3.5, 4x sort of valuation. Matt and Tim are sort of at a 1x-ish. How do we bridge this gap? Are they both fair? How should they think about it?
Yeah, I understand the position that you're in, Misha, and
You're muted.
I don't think I'm muted. Can you hear me?
You're good.
Okay. I understand the position you're in, Misha, as a founder. I think there's some emotional component to it. But looking at it from a market perspective, I would expect to see between 1 and maybe 2.5 times revenue. I think that's an easier way to look at it because there's some variation here. I'm quite sure if you stripped back the financials, the EBITDA number would be a little bit higher. So I think, looking at SaaS sales in that range, I think that's fair. But you're asking on call it a $2 million company, you're asking for $9 million. I think that's above where the market is for SaaS businesses that are not strategic purchases from the numbers that we've seen. And to some extent right now, I think numbers are also getting pushed down a little bit. So again, I would be thinking in the 1 to 3x revenue range as kind of my bottom and top at this point.
Speaking of stripped value, so no cash, no equity, right?
Correct.
When you put it that way, you said 1 to 3x. 3x is close to what I would be expecting.
Yeah. I mean, it's a range, right?
That would be 6 million, Misha, versus 9 million.
No, I said 7 million. I said 7 million.
Plus the cash in the bank. So if you want a 7 million valuation plus your 1.2 million cash in the bank, okay, that's an $8.5 or $9 million total valuation. What David is saying is 3x-ish of your current revenue feels more fair, which would be something like 6 million or 5 to 6 million plus your one. David, that's not including the 1.2 cash he's in the bank, right?
Yeah, I mean, I would think of it as a total price, and then you would net out the cash out of that in total, because the buyer has to be able to make this back over some period of time, and you have to assume that you double or triple the business over some reasonable period of time, and the metrics that people want to see in this space is roughly a 1x cash price purchase to revenue over some some period of time, right? So if I pay $5 million for a company, I want to be able to get to $5 million of revenue in that company in 12 to 24 months, maybe a little bit longer, but not too much longer.
Misha, this is like Who Wants to Be a Millionaire, your lifeline. Any last questions for David before you make a decision on Matt and Tim?
Basically, it's your turn, guys. I think David is acting like a kind of what's the word? Middleman.
Mediator.
Yeah, indeed.
Yeah, I'll give you one more piece of advice as a founder. People always ask, when do I sell a company? And I think it's a very simple formula for founders. If someone is willing to pay you at or above what you think the company is worth today with near perfect information, you should think about it. If someone's willing to pay far more than what you think it's worth, you should definitely do it, because you have near perfect information about this company, unlike me or anyone else on this call, right? And I think that's the easiest kind of thing to remove emotion from it, because as a founder, we're very emotionally attached to it. And I feel that you are as well when you say, I still want to be on board and I still want to grow it. And those are great things, but there's an emotional component that's separate of actual value.
My emotions tell me, and of course I am an emotional guy, my emotions tell me, okay, this offer is too low. On the other hand, I have a rational side of my personality, and that rational side tells me, okay, these guys need to make profit as well. And if we're going to find a middle ground, that ground needs to be somewhere in the middle.
That's good. That's the title of this episode. If we're going to find middle ground, it's got to be in the middle. David, thanks for coming back on, man.
Thanks.
All right. So Tim, Matt, last chance here to summarize or change offer, or Misha, if you want to counter, but it's decision-making time. In the next 5 minutes, we need to get to a decision. So first, Matt, Tim, do you want to change your offer or restate anything?
I mean, I'm happy. I'm very excited about the prospect of working with Tim on this type of opportunity. I think the biggest thing is, I mean, you just have to do ultimately what you think is right for yourself. I think you've been going at this for a really, really long time. And oftentimes getting other folks around the table can unlock things in a way that you may be surprised. And I think the other thing is this isn't the only, opportunity for you to make money. If you value the business, at 7 million, you want to make 7 million off the business. Ask yourself then what needs to happen to get this business to a $20, $30 million exit, and getting the right people around the table is the key to that, not necessarily grinding or retaining 100%, to get to 7 million. There's more than one way to let your equity and money work for yourself. And so that's the only advice I give. Obviously I'm biased here, but whatever you choose, I'd also be happy to jump on a call and, help talk you through like sales strategies and things like that. I think it's super, super admirable that people come on here and do this. And you're honestly one of the funniest guys we've had on here. So I love your attitude. You're a great guy. So yeah.
So here's what I'm going to do to simplify things. Matt, are you comfortable letting Tim lead this, and then you and Tim can work out a deal? If Tim ends up doing a deal and Tim wants you on board, you guys can backdoor deal?
Absolutely. Yep.
All right. Thanks, Matt.
Pick me up.
All right. So Tim, just you and Misha now, right? So Tim, any last things you want to say before we put it over to Misha and make a decision here?
Yeah. So as one thought, and one of the YouTube watchers kind of left a really nice comment saying like, what is most important to you? Is it the money or is it the strategic partner? And like from this discussion, I'm not 100% sure which it really is, because if it's for the money, then sure, it's really, you're maybe even selling 100% of your company and you're out and that's it. And then you just try to get as much as possible. If you're looking for a strategic partner, then you really got to think, okay, what's the likelihood of them helping you? Like how you structure it in a way that you also make us work. And where do you want to be in like 3 or 4 years? And then fundamentally, it's not about 1.5 million or 7 million anymore, but it's about the structure of the deal and how you make the most out of it. And also if you're open for advice and for sparings, and because you're giving up part of your freedom, and that's really more than just about the money.
Yes, you said a couple of important things, and knowing a little bit from your past and the businesses you've been running and the recent businesses you've acquired, which probably would bring some synergy on board. That's very welcome. Yeah, what you're saying is there should be some strategically speaking, yes, we could team up. On the other hand, we're speaking here about the 10 years of my life invested in Price to Spy, and it's evaluating those 10 years is important thing as well.
Emotionally, yes. Rationally, nobody pays for time. People only pay for results.
You are right. But let's see if we can find some sort of middle ground.
So Tim, just repeat the offer so we can get a yes or no from Misha. Make a decision.
So repeating, or I'm going to try to bake in Matt, because I think you really would be offering a lot of value on the sales side. So first of all, you have to decide on how many percent you want to keep. But let's say, maybe, for example, you want to keep at least kind of 25%, which is kind of putting you over the minority hurdle. And then Matt maybe has another 24% or something. We need majority for our model. So we would take 51%, you'd keep 25, and maybe Matt takes 24. And then we would value the company. So enterprise value would be let's say 1.5 million plus cash. So that makes it at roughly 3 million, including cash. and it would mean we acquire the shares, so through a secondary, so you get paid. In our case, from us, you would get a check of 51% of the enterprise value, 3 million, which is 1.5, and from Matt, the remaining 750,000. So you have roughly 2 million in the bank, and you'd still own 25% of the company. And then the goal would be, with my product and scaling expertise and Matt's sales expertise, to make this a $10 million company in the next 2 years and a $20 million company in the next 4 years. I think that's realistic for this type of business. And then, you can do the math. You want a smaller percentage of a bigger pie, or you want the majority of a small pie.
Let's simplify things, because this cash in the bank and the equity blur things up. Let's talk about pure valuation. How much you think the price to SPY is worth? So can you simplify that for me, please?
So on the simple valuation, it's the 1.5 million. But for me, the hard thing is not the money. The hard thing is I can only support a handful of companies with my time, and so can Matt. So my scarcity is time and attention to a company. And so I'm not thinking, okay, is this really something where I'm paying exactly the amount of what it's worth something? But we value business at a 4 to 6x profits, and so we're already at the higher range. And this business is not growing like crazy. It's growing at a very small rate. Like in your chart, you said 0.5% MRR growth in the last 12 months. So that's very slow growth. And you rightly want to accelerate that, and we want to help you with that. But you just don't get 7 million for a business like that if you just sell it.
So guys, I hate to be the bearer of bad news, but this would go on forever because you're both good guys and you're going to want to work it out. But I have to, we're 30 minutes over. So I'm going to repeat this offer, Misha, back to you. Tim, you make sure I say it accurately, and Misha, then you decide if you want to do the deal or not. Tim's offer, okay, and it loops in Matt, is he's valuing the business, Misha, at $1.5 million, which means he's going to come in and buy 75% of the company. He's going to buy 51%, and then Matt would buy 24%. Meaning you're selling 75% of the company for $1.125 million. That's that because they're valuing it at 1.5 million. 75% of 1.5 is $1.1 million. That is in addition. You do whatever you want to do with your cash in the bank. Okay, so it doesn't include the cash in the bank. So the offer is $1.125 million for 75% of the company. Is this going to be a deal, or do we bust?
Bust.
No thoughts. All right, Tim, thanks for coming on, man. All right. Misha, they wanted to do a deal with you. That was a quick bust reaction. Spend 30 seconds here and wrap up for us. Why'd you say no? These are talented guys.
The gap is too big.
All right. Well, listen, it takes a lot of vulnerability for coming on. Guys, if you enjoyed learning about price to SPY and Misha today and you're in the comments, Russell, Hans, Ronnie, Gurov, guys, give them a thumbs up. Make sure you subscribe here on YouTube. And Misha, I want to thank you for being vulnerable and coming on. Congratulations on the company you've spent a decade building.
Thank you.
All right. Guys, again, if you're just now tuning in, you just got done watching an episode of Deal or Bust. Don't miss next week's episode. Make sure you subscribe right now by clicking subscribe on YouTube or going to nathanlatka.com/next week. The episode next week is going to be a good one. I think that one will get a $3 or $4 million offer. We have a whole new set of buyers, new experts, and a new founder. I want to thank you guys all for taking the time. And again, thank all of you that upvoted Founder Path on Product Hunt. I'm going to go hang out in the comments there now. Until next Thursday at 1 p.m. Central. Again, thanks, guys. I'm Nathan Latka, and you just finished watching Deal or Bust.